Hi, it's David here, the CEO and founder of the Freedom Founders Mastermind community. Big business news this past week, and that is for the first third of the year, first quarter, the S&P is having its worst start to a year since 1939. That's over 80 years ago. The S&P is down 13% since the beginning of the year. The Dow is down 9%, and the NASDAQ, tech heavy, is down 21%. What's that mean? Well, it just means that we are off to a relatively poor start in the financial markets. Not particularly surprised. I didn't know how much it would be, but realized that we've been seeing the effects of inflation. Used to be transitory last year, now no longer transitory. That increases the cost of capital, and the cost of capital and wage increases and supply costs are causing the compression in company profits. And that's going to take down in general Wall Street. Facebook, Amazon, Apple, they're all down. They're all down right now. Now, does this mean everything's going down? Does this mean we're in a heavy correction yet? No, can't say that for sure. But the trend is there. And the major point I make to most people is that we are just left a 40-year, that's a long time, 40-year cycle of disinflation and lowering interest rates. That's from like 1980 when we had high inflation and high interest rates. 40 years we've been trending down. That's made for a stock market and bond major markets. It's helped real estate. It's helped all asset classes. And those of us who have been in any of the markets and done well, that's been a blessing. The problem is we can't stay on the same model going forward. It's going to shift. It's going to change. I don't know about you, and I know that people that are heavy into the stock market typically don't like to leave the stock market. That's what they believe in. And I'm not saying you should leave it. You should stay on the course of what works for you. But being an investor in alternatives, particularly in real estate, since 1980, that's in fact when I started and bought my first property in 1980, in high inflation, in high interest rates, I have learned how to navigate these market cycles. And I've been through about five major ones. And so I know how it works. The last thing I want to do is lose principal in my investment. The thing I like about real estate, it provides a very strong cash flow dividend. Now, some stocks in the stock market provide some essence of dividends, but most do not, or the ones who do pay a dividend, it's small, and most people are betting on the appreciation or the value appreciation of their stocks. In real estate, I get both. I get both the value appreciation, which we've had just like the stock market, but I also get appreciation or increase in the cash flows. I want both. I want the twofold. I can get that in real estate. I can't get that in the stock market. Many people have said, including Charlie Munger and the late Jack Bogle of the Bogleheads of Vanguard, have predicted that this decade of the 2020s will be a very lackluster decade for the stock market. Again, why? Because we've got this uptrend in cost of capital, cost of everything going up, and that usually doesn't bode well for the stock market in general. Now, you could pick a few here and there and probably do well, and if you like to do that, you can do that. In real estate, it's a lot easier, my opinion and my experience, to use that model and to navigate the historic cycles. I get the dividend of the cash flow, whether we're in an up market or down market. And when we are in an up market and we have inflation, I'll hedge against that. When we're in a down market, as long as I'm not over leveraged, and that's where people get into trouble, as long as I'm not over leveraged and I have a cash flow margin, I can ride right through that downturn and pick up properties that are on the downside. Either way, it works out well for me. If you're not making a change in your model, if you're not looking hard at what you've been doing that's gotten you to where you are, but concerned about where you're going, this is a time to maybe look at a different path or look at an alternative path. Don't put your head in the sand. Don't just keep your fingers crossed and hope that things will turn around and get better or you won't have to deal with it. I truly believe we're in a different marketplace, a different paradigm shift. Does it mean that you need to throw all hope out the window? No, but you've got to take control. You can no longer abdicate to the financial markets or to financial advisors or to your 401k. I do believe those models are over and done for the most part. You need to look for a different path. I've proved it. I am a product of the product. If you want to find out how to do it, follow me. There's lots of ways you can do that. Links are below. Hope you stay focused on your freedom because that's the only way to go. See you next time.